Hello everyone, welcome back to my channel. No economy can prosper without a good banking system. Banks provide credit to businesses and individuals for various purposes, and they provide a platform to people with excess money to save it and earn interest income. A while back, I made a video on how to choose a bank. Today, I'll continue the banking series and discuss about the CASA ratio, that is the current account and savings account ratio. Firstly, I'll tell you about a basic point so that you can understand the video well. There are two main classifications of deposits: demand deposit and time deposit. Demand deposits are very liquid, that is, you can withdraw your money whenever you wish to. Time deposits, on the other hand, are less liquid, that is, you cannot withdraw your money before the stipulated time period ends, or else you will have to incur a penalty. Demand deposits include current accounts and savings accounts. They are also called CASA. Current accounts have no limits to the number of transactions that can be done. However, no interest is paid on the amount deposited in a current account. On the other hand, savings account allows you flexibility in transactions. However, there is a limit to the number of free transactions that are allowed, beyond which you will have to incur transaction charges. To encourage savings, an interest of 3 to 3.5% per annum is paid on savings accounts. Term deposits, on the other hand, have a fixed maturity, that is, no withdrawals are allowed before the stipulated time period ends. So, the bank gets to keep your money for a predetermined period without having to worry about repaying it back to you. As a result, a bank pays higher interest on a term deposit as compared to savings account. Currently, the term deposit rates are 5 to 6% per annum. Now that our base is clear about this topic, let's start with the CASA ratio discussion. The formula of CASA ratio is CASA deposits divided by total deposits. A high CASA ratio indicates that out of the total deposits that a bank has, a larger portion comprises of current accounts and savings accounts, and a smaller portion comprises of term deposits. This means that bank receives a large amount of money in the form of demand deposits, that is CASA, as compared to term deposits. We all know that demand deposits pay less interest as compared to term deposits. We also know that deposits are a bank's borrowings, that is bank's liabilities. This is because bank has to repay the money to the depositors. So, if a larger portion of bank's deposits are demand deposits, it means that the bank's cost of borrowings is lower. We all know that banks take deposits from customers and pays them interest, and the money thus received is given out as loans to borrowers. The bank collects a higher rate of interest from the borrower. The difference between the rate at which bank lends and the rate which it pays to its depositors is the bank's net interest margin. Higher the net interest margin, better it is for the profitability of the bank. So, a bank which has a higher CASA ratio will pay low interest on its deposits, and thus it will have a higher net interest margin. So, it is very desirable to have a higher CASA ratio. Banks like Kotak Mahindra Bank, HDFC Bank, which are some of India's most successful banks, have a very high CASA ratio. A bank needs to have a very good brand and it needs to be trustworthy so that individuals and businesses open current accounts and savings account with them. A point to note is that a bank with a lower CASA ratio will have a higher proportion of deposits in the form of term deposits. As a result, its cost of funds will be higher and its net interest margin will be lower. Such a bank has a higher chance of facing financial stress if borrowers start defaulting on their loan. Why is it so? The reason is a bank with a lower net interest margin will have lower profitability, and its profits may not be enough to cover the losses arising from non performing loans. So, while analyzing a banking company, it is very important to look out for the CASA ratio because it directly impacts the bank's ability to generate profits. If you have any doubts relating to this topic or any other topic, you can ask them in the comment section. I'll be glad to answer. If you want to discuss anything with me, you can connect with me on social media. I've put the links in the description box. If you like this video, please give it a thumbs up and subscribe to my channel for my upcoming videos. Do share it with your friends and family who might be interested in finance. Stay tuned. Thank you.